Okay, so I think now's a great time to make a quick video update. I've been more active in the server and a lot less on YouTube lately, but I can assure you that we have been putting in the work in expectation of this. So bottom week was not the bottom. It was actually the next week, which was totally fine. We have put some tactical holdings in on bottom week and the week after, and we have not gotten, but something like 25%. I think is the max that was allowed. I've only gotten to 19% allocation in Bitcoin. At this point, I'm just waiting for trend confirmation. What's interesting is our short-only system is starting to show some cracks. It's starting to lose momentum. It already was losing momentum. It's starting to reverse momentum is what I should be saying in some indicators. But however, when we look towards the long systems, it's in the server here. The medium-term system, that's yesterday's market risk radar, but the medium-term system is up 0.06 today, and it did go from negative 0.69 to negative 0.56, and then negative 0.5 today. The long-term system is unchanged from, I believe, negative 0.84, and that is because of how I do the liquidity analysis. Let's see, which one of these was it as well? Yeah. And I have pointed out in the server, this was back on the 15th of last month, one of the cases where I pointed out how bottom week begins, when bottom week did in fact begin, and I made a point to everyone, as you can see highlighted here, that looking back in time, there is an approximate deviation of 2 to 4 weeks before bar closes at higher prices and the rally resumes. Just take the tariff recovery and the final leg up in 2024. It took about 3 or 4 weeks respectively before higher prices, but it could also turbo inverse nuke from here. Be prepared for anything. So tariff recovery and the final leg up in 2024. If we go to the price changes here, we can see that this was actually bottom week in the GLI 3-month rate of change, and it actually went down the next week, and then the following week after that it went straight up, and looks like so far we're going to assume that in 3 days when the next bar closes, if we keep trending higher and this doesn't break, we would have had a same type of situation play out as the tariff crash. And then I believe the final leg up in 2024 was it this one I'm referring to? I believe it was. Bottom week was here, and it actually like turbo inversed all the way up and came back down. And then we had another negative candle before finally I guess that would be a hammer, right? A hammer candle. And it was bullish candle, and from there on the trend continued. So right now we have history on our side and multiple different parameters using this form of liquidity. Now, like we mentioned, we have talked extensively about how there's theory, and we talked about it in the Discord mostly. It's kind of complex, but not really. The kind of liquidity that we're getting here is not good liquidity. Like the rate of change, right, from here to here was relatively flat, and on a daily scale it was not good at all. And of course, that kind of liquidity, the argument was that it was bad liquidity and that it was not a sharp enough rate of change to sustain the correlation that we had to IGV, which was the software ETF. If we look that one up and put that on here, we got to do it this way. Yeah, if we put on a new price scale, we can see that IGV is also finding a rather strong bottom, as you can see in the blue. And let's see if I can move this down. Probably best to put it in a new pane below, and you can see it's fairly aligned with the GLI as well to an extent. You know, not exactly the same, but you can see how Bitcoin has followed it. And any alpha that you can extract to determine the average direction or a lag of some sort on IGV is useful on Bitcoin. GLI is more exclusive to Bitcoin, but you get the idea. So what the crux and the base case hypothesis is that this zone here of liquidity rate of change is what we're in right now, and we're in this trend. And that this is the road to the next uptrend. Now, the capacity of this next uptrend could be like this. It could only go like this high and then come down. That's really unlikely, I think. It could honestly go way higher before collapsing. Perhaps Walsh gets in and he's not as bearish as we thought, or as hawkish as we thought, and maybe that causes a extended consolidation, nerfing what should be the 2026 bear market. We will see what happens there, but I think that this rate of change in global liquidity applied with our lags is way too strong to ignore. Of course, as always, no financial advice, but you should be doing the research and you should already understand how this works if you want to move along with it and invest with it. And I think that is enough showing that one. I think that was worth talking about. Let me make sure that's everything. I think we've already talked about the on-chain again. Was there anything that was worthwhile looking at? I'll check out a couple of the derivatives on, the funding rate coming back positive, and I think adjusted it is still a negative endeavor. Yeah, it's been negative consistently since this nuke. Not a terrible thing to see. We'll check the Velo real quick. It's been a long day. Not really in the mood to go all out on this. Yeah, and I think if we go to the 1 day, on the daily chart, we're still in negative territory. The most we've seen, the most consistent or the most persistent negative funding zone we have seen since the last bear market. It's not even comparable really to these, but it's not comparable to any of this here. 1 week, I believe it is a different story. Yeah, first negative weeks persisting since literally the last bear market bottom. This isn't the end all be all, however, it's something that we should pay attention to. I think Solana was an interesting one to look at as well. I'll go back to the trading view, check out Solana. Yeah, 1 divided by BTC is not looking the best. On the 1 day chart, you can see that without the indicators applied, that the trend is literally weakening and dying. It would actually take something like this to reestablish the trend, the downtrend, and we'd of course continue to, we wouldn't close out our shorts anymore. And the thing is that it's very complex with how we aggregate everything together. My portfolio, to be clear, is majority short Bitcoin. However, we have the global liquidity lag here as the cutoff, and starting literally last week, I had cut all short positions to reduce risk temporarily and been holding cash for the week and made deployments throughout that week, but still mostly in cash at this point. Because as you can see, the lag has worked successful, or has been paying off. Something to pay attention to has been paying off to pay attention to, excuse me. Now, a resumption of the downtrend would likely be a strong confirmation. It would likely be a break or a snapping of our correlation that we use. And redeploying a short sale would not be terrible. It's okay if you missed it. It's okay. It's totally fine. It looks like on the bar open today, 15 minutes ago, we're up on the bar. This means nothing. It's a quarter of an hour throughout an entire day. Enjoying the present, see what's in here. Yesterday, looks like no one else has put anything else in here as of the last few days. It's really just been the DMs. It's funny because we actually have on the server, it used to be everyone putting everything at once, but it would all get so convoluted. Now it's just a GC or some DMs mostly. And then of course in the alpha chat as well, we share a lot of stuff in there. And is there anything else that pressing? We can check Ethereum. We can actually pull up the VAMS ranges for Ethereum. Okay, it's at this mid-range. The VAMS is coming up on Ethereum. Pretty sure the same story for Bitcoin. Indeed it is. Actually, that's very interesting. I had not looked at that as a blind spot, and something I would always go to. Yeah, look at this. You can literally see that consistently you hit the VAMS range, the bottom, and then within a candle or two you repel back to the mean. You hit it, repel back to the mean, hit it, repel back to the mean, wick it, or go back to the mean. And if actual trend starts coming up, hit it, repel back to the mean, probably hit it again at some point, back to the mean. But the mean will probably be following up like this, so you won't even go that far down. And then that's how you get uptrends. Like you can literally look at the history of this. You can see like the last major uptrend. We touched it, kind of came back to the mean and slowly climbed up, touched it, back to the mean, stayed in the mean zone, touched it, into the mean, almost touched it, into the mean. And I think an even better example actually would be, because this rally was not the healthiest of recoveries, but something like the Trump rally was incredible because we had hit it for a candle or two, You hit it for a candle or two, kind of you can keep going up, but you're going to be around the mean, down a little bit, touch it, revert back to the mean, come up, touch it to the mean, down low to the mean, rally up, consolidate, hit it, slight consolidation while hitting it, because this was an extremely euphoric rally. Hit it again, mean, down, mean, down. This was a crazy candle. I remember that day when that happened. Hit it, go down, and then you see the point. The VAMs are very useful. If you're in a trend confirmed zone and you're seeing aggressive wicks, like let's say that at 76,000, we get a trend confirmed. And we're going to say that the VAM's mid-range does this. And price goes up, hits it, closes, comes back down to here, to the mid-range, down to 73K, and even wicks a little bit lower. And the lower range is like right here. The trend is still confirmed based on the bar close, the uptrend. And we have the VAMs range, the volatility adjusted ranges, to show us that actually the trend is still intact, still doing just fine. And that's what causes, it's like tools like these that we supplement in our system. Some indicators are already included in that, but it's supplements like these that help us not deviate from the system. It gives us the actual systematic and technical way of understanding where we're at, because then of course price would start to climb back up, the VAMs would recover with it, and then whatever happens from there happens from there. I wouldn't be surprised if something like that happens. If it does, make me a millionaire or something, I don't know. I win some free money, I guess. But yeah, I think that's going to be enough for today.